Banking regulators announced on Sunday, March 12, 2023, a plan to support depositors with money at Silicon Valley Bank and Signature Bank in New York, which was also shuttered over similar systemic contagion fears. This is a critical step to prevent a systemic panic from the collapse of the tech-focused institution. Depositors at both failed banks will have full access to their deposits starting Monday. The Treasury Department designated both SVB and Signature as systemic risks, allowing it to unwind both institutions in a way that fully protects all depositors. The Federal Reserve also created a new bank term funding program aimed at safeguarding institutions affected by the market instability caused by SVB failure. The joint statement from the various regulators involved emphasized that there would be no bailouts and no taxpayer costs associated with any of the new plans. Shareholders and some unsecured creditors will not be protected and will lose all of their investments. The Fed facility will offer loans up to 1 year to banks, savings associations, credit unions, and other institutions, asking them to pledge high-quality collateral such as treasuries, agency debt, and mortgage-backed securities. The Treasury Department will provide up to $25 billion from its Exchange Stabilization Fund as backstop for any potential losses from the funding program. A senior Fed official said the Treasury program is likely not needed and will exist only as a safeguard. The same official expressed confidence that the various moves would shore up confidence in the financial system, providing funding guarantees and liquidity considered essential during financial crises. Markets reacted positively to the new developments, with futures tied to the Dow Jones Industrial Average leaping more than 300 points in early trading. Cryptocurrency prices also rallied strongly, with Bitcoin up more than 7%. The rescue plans rekindled memories of the financial crisis, but Treasury Secretary Janet Yellen said Sunday morning that there would be no SVB bailout. President Joe Biden praised Sunday's initiatives but indicated that there would be consequences from the crisis. "I am firmly committed to holding those responsible for this mess, fully accountable, and to continuing our efforts to strengthen oversight and regulation of larger banks so that we are not in this position again," Biden said. The SVB failure was the nation's largest collapse of a financial institution since Washington Mutual went under in 2008. The dramatic moves come just days after SVB, a key financing hub for tech companies, reported that it was struggling, triggering a run on the bank's deposits. Authorities had spent the weekend looking for a larger institution to buy SVB, but came up short. A senior Treasury official said Sunday evening that a sale is still possible for Silicon Valley Bank. The initiatives Sunday were done to head off further potential problems. Stay tuned. Cheers.